Hi, welcome to Learn Domain. Today we are going to discuss about the classification of capital markets. As you know, capital markets plays a vital important role in strengthening the financial position of any society. So in reference to the classification of capital markets, usually these capital markets will be divided into two parts. So the first one is called primary markets, whereas the second one is called secondary market. Primary market, where securities are sold for the first time, which is called primary market, where whoever and whatever the kind of public issues through prospects and all everything will be taking into an account. So based on that, whatever the offer of sale we are doing, at the same time, whatever the kind of private placements we are working on, followed by right issues. At the same time, initial public offer, because any organization who wants to listed into public limited company, the very first thing what is that they have to do, they need to come up with an IPOs, because any organization they can come up with IPOs, but make sure there are some rules and regulations which people has to follow. So in this IPO initial public offer, through initial public offer, they can raise funds from the public by issuing shares and all everything. So based on that, whatever the funds they have collected, that will be invested in their business accordingly. That's what generally they do. This is what generally happens in primary market. So in this primary market, usually these IPOs and all everything will be taken care of. And if someone wants to apply for an IPOs or someone wants to come up with IPOs and all that, so investment banking companies will take care of. Investment banking firms will be there who will be taking care of these IPO services, all that. Now, when it comes to the secondary market, where normally the sales and as well as purchases of newly issued securities, at the same time, whatever the second-hand securities and all, everything will be made under the secondary market. Here, company does not directly issue their securities as well as shares and all, everything to the investors. So where existing investors of the company can sell their securities, because once the securities or shares were purchased by the customer one time, after that they can sell, because this is where generally shares will be off, right? So because shares will be issued only once. Again, in the shares, again, there are two things. One is open-ended and second is closed-ended, right? So open-ended shares is one type of it. Closed-ended shares is one type of it, of course, right? So this is where generally we need to see. So once the shares were issued, this is something relating to MF kind of stuff. But still, when it comes to the shares itself, whatever the shares were purchased by the customer or an investor, they can sell their securities and all everything to the other investors. At the same time, investors who wants to sell the securities and who wants to purchase will meet at the secondary market so that they can exchange the securities with the help of intermediary, whom we call it as broker, right? So these are the two different type of markets which are there in capital, right? So one is primary market and second is what about secondary market is all about. For more information, please reach out to the contact details, which will be posted in below to this video. Thank you.